Eurocurrency. Money deposited in a financial center outside of the country whose currency is involved. First, notice how this definition has no mention of Europe, right? And that's actually an important, detail about this term. Eurocurrency has nothing to do with Europe. Basically, the part euro means overseas. That's kind of what it means in this context. So what Eurocurrency means, it means, for example, we can say euro dollars. So what's euro dollars? It's dollars, but not in the United States, but outside the United States. So US dollars deposited in banks outside the US banking system. There's also euro yen. That's Japanese yen, but not in Japan, but outside of Japan. So outside of Japan's banking system. There's also euro peso outside Mexico, right? There is euro yuan, Chinese yuan, but outside of China. There's also euro, right? Euro. What is that? Euros outside of Europe, outside of the European banking system. So somewhere else in other parts of the world. Then similarly confusing are the next two terms, Eurobonds and foreign bonds. So again, in the term Eurobonds, the part euro has nothing to do with Europe. It again means the same thing as in Eurocurrency, being outside of the country. So Eurobonds and foreign bonds are both bonds. Remember what a bond is? A bond is a financial security that you can buy or sell. Who sells bonds? Like originally? Originally, it's companies or governments that sell bonds with the purpose of borrowed money. So the amount of money that each bond sells for is how much has been borrowed with that one bond. Anyway, so Eurobonds and foreign bonds are both bonds sold in other countries, overseas. Now let's see what the difference is. Eurobonds, by definition, are international bonds issued in multiple countries, but denominated in a single currency, which is usually the issuer's currency. Let's look at an example that will make it clear. Euro-yen bond. It's a bond sold by Japan. So maybe Japanese companies want to borrow money, or the Japanese government wants to borrow money by selling bonds. But these bonds sold by Japan are sold outside of Japan, and their price is quoted in yen, which is the currency of the issuing country. So there is a euro-yen bond, there is a euro-dollar bond. So what would be a euro-dollar bond? Bonds sold by American companies or governments, issued by American companies or governments, but actually sold outside the United States. Euro bonds, so European companies or governments bonds sold outside Europe and price quoted in euros, and so on. Foreign bonds are actually very similar to Euro bonds. Foreign bonds are also defined as international bonds issued by a foreign entity. So entity means, again, either some company or a government in a single country rather than multiple countries, denominated in that country's currency. So let's look at some examples. Yankee bonds. It's bonds issued by foreign banks and or firms, but sold in the United States, and the price is in the US dollars. So unlike Eurobonds, foreign bonds are quoted in the currency of the country in which they are sold, rather than, like with Eurobonds, they're quoted in the currency of the country where they're coming from. Then there are other names which are actually all pretty funny. Samurai bonds. That's bonds sold in Japan. The price is in Japanese yen, but who issues the samurai bonds? Other countries, companies or governments. Bulldog bonds. That is kind of linked to the Great Britain. So sold in Great Britain, issued by other countries. Kangaroo bonds. That's Australia, and so on. Then we have one more term. It's actually an abbreviation, LIBOR, L-I-B-O-R, which stands for London Interbank Offer Rate. This is defined as the rate most international banks charge one another for overnight euro-dollar loans. So in other words, kind of to simplify this definition, banks around the world can borrow money from each other overnight, just for one day loans. What interest rate do they charge each other in this international platform? The LIBOR rate. The LIBOR rate is also something that is changing regularly. It's published daily by the British Bankers Association, which represents banks of over 60 countries. Where do we see the LIBOR rate in this country? Actually, it's used is a very important interest rate benchmark for home loans. So if you want to buy a house, you need to borrow money from a local bank. You walk into the bank and the bank might tell you, okay, today's annual interest rate on home loans is LIBOR rate plus, let's say, another 1.5%. But the LIBOR rate is used as a benchmark for home loans only when the home loans are so-called adjustable rate mortgage loans, where the rate is changing every year rather than fixed rate loans. With adjustable rate loans, the rates are fixed for some initial period, so let's say 3 to 5 years, and then it starts changing once a year, together with the LIBOR rate, kind of following the LIBOR rate. Okay, what are foreign exchange markets? It's the market in which one country's currency is traded for another country's currency. You should not be trying to imagine like some physical location, like a single physical location, kind of like, for example, New York Stock Exchange, in which the currencies of different countries are exchanged for one another. It's more like a very general term, kind of summarizing all the different, platforms where the currencies can be exchanged. It's more like what is known as the over-the-counter OTC market. There is no single location where traders get together. The market participants, who are the market participants? Who are the traders of currencies? They are commercial and investment banks around the world. They are importers, exporters, so different companies that focus on importing and exporting stuff. People who buy foreign stocks and bonds, speculators who try to profit from changes in exchange rates. It's also, travelers, people who travel overseas, who go to a bank to exchange one currency to another. So all these are different participants. And like all these different participants, they communicate on the internet, so the currencies can be exchanged on the internet or on the phone, kind of in many different ways. And that's what the over-the-counter market means. The opposite of the term over-the-counter market would be something like a single physical location where the trade occurs. In this world, the most sort of important currencies that are traded the most are the US dollar, the Japanese yen, the European euro, and the British pound. And this entire foreign exchange market is the world's largest financial market. This refers to the, let's say, the value in money, let's say in dollars, of how much is being traded every day And that's much larger than the value of all shares of stock, for example, or bonds traded every day. So it's the world's largest financial market.